Hi, everyone. Hello, Stavros. How are you? Good afternoon. You're Mary Chemling. How are you? Hi, Brand. AJ, Simon Nielsen, Simon King, and Ryan Littlestone.
Hey Dale, how you doing?
Okay, buddy. How are you?
Yeah, all good, mate. All good.
All
It's
right.
Christmas.
So we're winding the year down, and it looks like the Santa Claus rally has started. Faded at 39.50. Rudolph's nose will stop blinking up
Is that your
around
call for the
here.
week? Is it?
Huh?
Is that your call for the week?
No, I don't have a call for the week this week, except I do like the action and the dollar's not bad. I like the way it held the wedge, and I still think euro has a shot for 3.5, maybe 2, and euro and cable maybe down towards 118. Looks pretty heavy, and Aussie, 65.5. But last week's action in the S&Ps, and I know I'm with the consensus now. Everyone's talking about new lows into the first quarter. But, I can't, even though there's so many bears out there, I can't ignore what happened last week. It was pretty negative. So I'd say sell a Santa Claus rally to 39.50, 4,000. And a lot of confluence here at 6.5, but maybe it does just flush everyone out early next year. Maybe we'll get it over with in January. So that's what I'm seeing. Any news out of Europe that we should be aware of, Ryan?
No, nothing of note. The ECB floodgates obviously open, reiterating what they did last week.
Yeah.
But no huge news out anywhere of note.
Last night, yen was sharply lower and fought its way back from where, it should have, right? So we had the first rally, then we have this. I think we'll push over this high with the dollar up. Don't you?
Bank of Japan tomorrow.
BOJ, okay.
Yeah, tonight, tomorrow, and more rumours circulating about them maybe changing the framework or their view on inflation targeting, maybe going a bit more flexible. But that's not until the new year. But the rumours it's the old no smoke without fire situation again.
Yeah.
Been going on for weeks.
Well, I think there's a shot. It moves up and maybe even yields pop a little bit here. 10 years up 6 bips today. So this was this the CPI and the Fed right here?
Yeah.
And we never made new lows. So, for it to try 380, I think, would just be a normal bounce. Nothing earth shattering, but I think that should be yen supportive.
Yeah.
So that's it. And people's heads aren't into. Hey, Kman, how are you? Good. I get to talk to you.
You sound a lot better.
A little bit.
A little bit. Okay then.
If it's one of these 2-3 week things. Upper respiratory bronchitis kind of thing. But
if your cable call is as good as your oil call last week, then I'll be a happy man.
Yeah,
I have a little short cable, so may the gods of foreign exchange be with you.
Thank you. You too. I know you guys are going to wrap it this week. So do you close your books?
Well, I've got the family over, but then the unfortunate thing is that we have our I have my trading apps on my phone, so I'll always keep an eye on things. I might not close everything, but then at least the risk is going to be very small, and the amounts will be very low, very small.
Do you do that, Ryan? Do you close your books? You hold positions, so you're not going to let a holiday shake you out of a position, right? You just hold it through the holidays.
Yeah, I'll hold my Aussie dollar longs. I'm short, very small dollar yen. I might fold that after the Bank of Japan, see what's what.
Yeah.
Depends what level we are, because I'm the wrong side of the carry. So just for the sake of a week and a half, 2 weeks of paying money to sit on my arse, I might as well get out and see what it is when we come into the new year.
Okay.
You know what? Good morning.
Go
Good
ahead.
morning, guys.
Hey, Blake.
You know what? I came in, I hear what you're saying, you know, but I myself, I've actually quadrupled all of my positions and I took off all my stops and I'm just going for it.
That's the way to do it. You are a warrior.
I'm just kidding.
So
good morning, everybody.
Rudy's red nose will stop blinking, but it start bleeding.
Anyway,
now we know that what's why he's the only one that has gone to the Marines, right?
That's right. That's right. You know, that's Marines. That's what we do.
Yeah, the tough gets going.
Exactly.
Bigger.
They run towards the smoke. They don't run away.
We do. Yeah. It's like, oh, did you say fire? Let me go into it.
An explosion. Great. Let's go, guys.
Yeah. Anyway, no, I just want to say good morning, everybody. It's going to be I would assume it's going to be a pretty slow next couple of weeks. But you know, going back to like that BOJ action that in the articles that came out over the weekend about, you know, possible statement changing. I mean, I think this is going to be, and this is one of the conversations that I had with actually Chris Weston last week. We did like our trades of 2023, even though it's like, you know, it's kind of hard to look that far in advance, obviously, but I'm like, you know, my 2 cents was I really want to be buying yen next year. That's like the trade that I really wanted to do. And I was just talking about it last week because of the you know, we're going to lose Kuroda, and I don't know what the rest of the BOJ is going to do without, you know, their drinking buddy, but with him gone, there's probably going to be a dramatic change in the BOJ landscape. So, you know, Kman, you spent a lot of time in Japan, and you've obviously traded a lot of yen. How do you feel about what the yen could possibly do going into next year, especially given the fact that we've seen such a big move higher in all the yen pairs this year? And I think that's because if you look at like, and I'm sorry, Dale, I just took the chart from you to give you a little bit of a break here.
Yeah, thanks, man.
Yeah, no problem. You got like the euro yen. I mean, look at the rally just from, I mean, we can just talk just this year. This is a weekly chart. So here's the euro yen this year. Sterling yen's a little bit different. Obviously, we got to not think so much about what the sterling yen's done. But here's the Aussie yen. You know, pretty big move up. But you
Aussie
know,
yen, Kiwi yen.
Yeah, all of them. You can see here's the Kiwi yen all year, right? This is a weekly chart. So, and then, you know, Canadian yen, I guess, would be the last one that we could talk about from, you know. Now we did a much bigger move, and we're looking a bit of a reversal. But how do you feel about the yen?
Well, first of all, I think you have to be careful to buy yen when Kuroda will leave the Bank of Japan, because there's likely 100% certainty that sake retail sales will absolutely collapse because he's not going to take his drinking buddies out anymore. So that's a bit of a danger for the yen, I'd say. But no, I think you're right. But it could be a Q1 thing into those reviews that the government is planning to do on on how Bank of Japan should handle CPI. But I don't know. The rest will really depend on what's happening with possibly the correlation onto risk, if we really dive into deeper a bad recession, I would say.
Yeah, that's what I was thinking.
That should help the yen in the first quarter, and then the market will anticipate this review. So you might be right that yen is one to have the first couple of months of the year, and then see what happens once come April, when the review will take place, when the wages will have been decided. There's a lot going to happen end of fiscal year in Japan, beginning of the new one, right?
And
Not
I have to
possible, but
remind
anyway.
everybody, and thank you, Kman, with your commentary, and that's kind of what I'm thinking is the yen might regain its composure as far as like a risk off type of hedge, especially if we have if we got recessionary pressures like the first couple of quarters. But the one thing I do want to remind everybody is that when you are buying yen and selling everything else, you will be losing a lot of money on carry if you decide to hold those positions longer term. This has been one of the best trades of 2021 and 2022, really, is the carry trade in the yen pair. So being able to buy, whether it's the Aussie yen, since 2021, 2022, you can see that really big move. But notice how they're starting to roll over, and they are really starting to, you're starting to see a risk after having an insatiable run higher. I think that if you're going to play them on the short side, which I am, that's how I plan on playing them in next year. You just have to do it tactfully, right? And I think that's going to be probably pretty key. Still,
the thing is as well, as you rightly pointed out, it's going to cost you quite a bit of money to be long yen because the Fed will hold rates higher for longer, likely.
For sure.
And then it's really going to be the data who will tell us if it's a soft landing in the US. I mean, I'm not saying it will happen that way. I'm just saying that if we get the hint or confirmation that we are going into a soft landing, I wouldn't bet on the yen personally. But okay, it can be a temporary trade going into the end of the fiscal year. That is possible.
Yeah. All right. Well, here's what I'm betting on going into next year, and I'm sure all you guys are too. I'm betting on a soft landing in the UK. So therefore, I'm going to be. I'm joking. I'm joking. No, seriously. I want to point out the euro sterling today, how it held pretty key. What I felt was key support overnight. This is the level, if you remember, was it Friday? No, Thursday. Wasn't it Thursday where I got long? Yeah, it was after the Bank of England. I got long right on face here on Thursday. I bought it at 86.20 something because we were pushing out of this triangle. And I sold it as we hit the 50% retracement. I did not think we'd reach for the 618 or the 78% retracement within that 24-hour period. I just didn't think we'd surge that aggressively. We hit the 78% retracement. We pulled back, but we pulled back to the big pivot area, which we were looking at on Thursday, right after the event. I think this is pretty key support technically. And I am joking about the whole UK soft landing, but I want to ask you guys, and let's start off with you, Stel, because I heard you just a moment ago. How do you feel about the sterling at this point?
I'm going to repeat what I said last time. I think the pound is going lower. So this shift apparent shift in the Bank of England, with two members voting for no change, I think this is a lot more dovish than expected. There's no way these people are going to shift to voting for a hike now, unless we see inflation going a lot higher, which I don't think we will. So my bias for the pound is bearish. My bias for the opposite reason for the euro is bullish. So I think the euro pound should be bought. And we talked about that level where it bounced, the euro pound bounce, which was the 50% fib, and also that previous support, then it was resistance. There's a level where there's been a lot of interest where it was
200-day moving average. Look at that. Ooh.
Yep. So I think euro pound should be bought on dips.
Okay, and let me ask you guys that live in the UK. Well, I heard. Well, there's Steve. Actually, Steve doesn't live in the UK, but Steve is really bullish on the euro right now, right, Steve?
No, I wouldn't say so.
Oh, okay. So are you bullish the euro over the sterling?
Yes, I think the euro pound reversal that we saw is quite a significant one, technically speaking as well. Very big impulsive day higher. I think we're just consolidating now the these gains. We've also broken through a trend line resistance that you haven't drawn there. If you ignore the huge wicks that we had at the end of September. Yeah. So I do think we have more upside here. Yes.
Okay. All right. Well, let's hear for the guys that live in the UK. So how do you guys feel about the UK economy going into, next year? Are you feeling positive? I know you're probably as you're sitting there freezing your butts off right now, but how are you feeling right now, Ryan, with the UK economy?
I don't think it's going to be doing all that. I think it's going to follow everyone else in going into recession and that sort of thing. The only thing I would say is when you get a lot of people writing off the UK, that's when we can show a bounce. We can move a bit faster than anywhere else. So, we can put in fiscal policies and, your good old British spirit. So you never write off the UK.
I did it for the World Cup. I don't know if I'm going to do it for the economy. I'm joking.
Same here, Ryan, and I'm not joking.
You guys did quite well.
See? And we won the Fair Play Award at the World Cup, so we did win something.
Hey, I was going to say, we can talk about the World Cup here in a minute, because what a match! I mean, that was like beyond ridiculous. But I don't want to talk about that just yet.
No, we should talk about that actually.
I want to ask you though, how do you feel about the voting in the Bank of England and inside of the BOE? I mean, how could someone possibly vote not to raise rates?
Well, they're just hedging their bets, really. Everyone's expecting inflation to pull back. Everyone thinks inflation has peaked. So why can those two not be right? In that, if inflation is falling, why do you need to hike more into a recession? So we won't know until we get into the next year and see what happens with data. But those two could be right in that 3% is enough to get inflation down. But I still think rates are going much higher than they expect anyway, because inflation is going to be much more stubborn in the UK than it is elsewhere. But that's the mess that it caused, and we said it was going to be a mess. We said it on the Flow show. We said it on F.A.C.E on Thursday after the BOE. I jumped into Euro Sterling as well.
Yep.
Still holding that. It's what they're going to do in the first quarter if inflation is still at 11%. Are those two suddenly going to turn hawkish again and vote for hikes? It's a mess then. It's going to be a mess going forward.
Okay, and Kman, do you have any thoughts, final thoughts on UK
on sterling?
Yeah.
Well, I'm short cable and I'm long Euro Sterling, so I think Sterling should do really, really, really well. No, you know what? Last week, jokes apart. Last week we had the Fiji elections and they went badly, so I think Sterling is going down.
Okay. All right. Well, I think it's gonna be an interesting topic of conversation moving forward, and to see the divergence between the two central banks, especially when inflation expectations of the European Central Bank went up last week, and that was, I think, a surprise to most participants. But we saw this reversal in the euro, and you can see that the euro is approaching some really critical support, in my opinion, because this is a wedge breakout. It's funny. I had I did the week ahead video, and the first comment, because I said the first comment that I got on my video was, that wasn't a false breakout in the euro. Like, okay, if you say so. But the fact of the matter is we've had this big move this last week, and we actually closed with these nasty bars here. And although I don't think the euro is going back down to I don't think we're going to new lows, but the fact that we rejected a 38% retracement last week, that from a trend following perspective, that's a big deal in any technician's book. So if you look at the long term of the euro, right, we not only rejected the previous 2020 lows, that was the post-COVID spike lows, we rejected that level, but we also have this big wick false breakout that's going to weigh on the euro a little bit technically. And I think if you look at the euro, just, from a price action perspective, it sucked a lot of people in above the 107 level. And you've got the sterling's got very similar price action. You get below this 200-day moving average, and the euro, starts breaking through this trend line support. We're going to have, I think, a little bit of a US dollar recovery. And I think that's what people need to be aware of, is the dollar has shown a nice reversal last week. And that is that's going to be, that from a risk reward perspective, and also from a hedging perspective, you can probably see the dollar gain some strength from here near term. But let me ask you guys this, and we'll go around the horn as far as the markets go. And Dale, and I'm so glad that you're feeling better, Dale. You pointed out that the equity markets look a little weak here, and that was some really nasty price action last week in the S&P, wasn't it?
Yeah.
So go ahead.
I see some confluence all the way down around 36.5. I have there's some moving averages and actually a trend line. And I was talking about this for the last few weeks. I thought December was a great month for a bear raid. But I was doing it with kind of like, this is going to be a great break to buy, and my convictions for that is not high. And I think that we could probably just get this one more flush towards 3,400, maybe not get to the 31. And I know guys looking for 29. So if you just extend that return line on the S&Ps out, I have it tagging the last low, the bottom trend line. Yeah, the bottom one. That would come in around 3,400. If you extend that out. So that's, that would maybe be the clearing event that we didn't have all year. And, I want to see if there are markets, if this makes a new low that doesn't. I don't think the euro's going to make a new low, or the pound, that they'll have deep retracements, but things that hold up with a risk off to new lows are going to be your best buy candidates for 2023.
Okay, and thanks for your input. And I'm gonna leverage a little bit of our experiences here as market participants for a long time. You put together, our whole team, and we've got a couple centuries worth of experience between those of us that are even on the mic this morning, not including the rest of the team that's not here. I've had, in my experience, I do believe that Santa Claus is real. He may not be real. Wait, hold on, kids, earmuffs, please. He may not be coming down the chimney for real, but in the markets, he's a real thing. I have a hard time fading this time of year, blindly. And what I've seen in my experience, in seasonal type of trades and trends, we could see a sell-off this week, but I am actually looking to buy a dip in risk this week, because I think that low liquidity and the fear of missing out, or the fear of massively underperforming the markets this year, is a real thing going into into the end of this year. Because as I explained on the week ahead video, when you have asset managers that traditionally their portfolios did not perform at all this year, all of 2022, you only got a couple of weeks left where you have to be involved some way, shape or form. And, I have a feeling that as we get past this week, or through this week, that lack of liquidity between, the Christmas holiday, which will be on Sunday, and New Year's, which will be the following week, that lack of liquidity is going to be the one that you do not fade. So, where we find a bottom at some point this week, I think it could be anywhere from, depending on, the weekly data, probably somewhere down here around the 3,800. I think we could actually move back towards 3,900 by year end. I think that's kind of, if I had to forecast and guess the weeks the next 2 weeks price action, it would be something like that. It would be like a little bit of a dip, and then we're going to get a rally back towards the, you know, in 2 weeks time. Again, it's just because you're going to have asset managers buying when there's no liquidity this next week. So I'm trying to figure out at what point this week that I'm going to be covering up some of my short risk type of plays. But again, I want to hear from you guys. So let's start with Stelios. What do you think? You've been around for a long time. You've watched these markets through the holidays. What are your thoughts?
Well, the fact is that Santa Claus does exist. So
in the market, yeah, he does. Or to your girls too.
Most often there is a late kind of a surge in risk. I think the last few years have not been as consistent as before, but I think the only reason why I'm not saying I think stocks are going to be a lot lower going into the year, or not a lot lower, but they're going to grind lower going into the end of the year and early next year, is because of this effect. Otherwise, I think the more hawkish than expected Fed and ECB would be a drag on risk. But I am a little bit skeptical. I mean, if you ask me what I think compared to today, where we're going to close, I think we're going to close a little bit lower, the yield, the year, but not as much conviction as I would have had if it wasn't Christmas.
Yeah.
You know, I don't understand what kind of performance anxiety money managers would have when they're marking against a market that's down 25%. So they're trying to beat the S&P. I guess if you're only down 20%, you outperform.
Well, let's imagine this, Dale. You have you're an asset manager in over Fidelity, right? And you own 40%, or let's even say less. You know, you have 30% in bonds and 70% in equities. And traditionally, you know, in 2000 this year, this is just this year, so let's just make sure we're all on the same page. This year, typically when stocks go down, your bond market your holdings are going to outperform. And if stocks are down, you know, let's say 20% on the year or 22% on the year, but your bond portfolio is also down, you know, over 30%. Yeah. Now what do you do? And your mix of, you know what I mean?
That's like, what I mean. They don't have anything to beat compared to the markers in the market. Like, they have performance anxiety. So, you know, they used to add on, you know, when markets were up 10%, 11%, they try and beat it to the upside. But this is the first year in many where the market's been down sharply. So no one's going to have good performance.
No one's going to have good performance. But if your percentage is multiples below the average market, you're probably going to see redemptions in a big way. So that's what I worry about. And for those of you guys that don't know that, I mean, let's just go back, okay, years. Let's go back here. Now you can see the opposite, you know, moves and the hedges that bonds would provide equities. You know, equities would dive, bonds would rally, you know, vice versa. You know, bonds rally as equities sell off. You know, you get that hedging effect. This year, you've had
it was worse in the bonds.
Oh my God, it's disgusting, right? I mean, you know, like literally, here's the beginning of the year.
The magnitudes.
If you have a mix of you know 60% equities and 40% bonds, you are effed all over the place. So I mean, this is the problem where I think asset managers are going to use that lack of liquidity to really step in. And by the way, Dale, do you have an interview today?
No, I don't.
I didn't think you did. I just wanted to confirm that before I can continue to ask everybody else's opinions here. We do have some Canadian raw materials price index. Let's look at that really quick, and then I'm going to I want to ask this of, you know, obviously Steve and Ryan and Kman as well. And I don't know if Greg is here, but I just make sure that I get you guys' opinions before we split. But let's take a look at Canadian data as it's coming out. Sorry, guys.
You know, Blake, the UK is not the only country with a pension problem. I read last week that Biden put in 350 billion to the Teamsters Union's retirement fund. So we're having pension problems here too for exactly the reason you just showed with the pensions getting creamed in the bond side of the equation. So we have a brewing pension crisis right here in the U.S.
It's
Bolstering
crazy.
the Teamsters.
Yeah, I
Yeah.
mean it's something to be thinking about. By the way, the RMPI, the raw materials price index, came in worse than last print. You can see the dollar Canadian getting a little bit of a lift here. Nothing too big. All right, so let's and thanks Dale for those comments. Let's hear from Ryan. What are your thoughts regarding the end of the year this year? Because I do think it's going to be tricky. It's not going to be like, like most years, right? Yeah, and we've had a really nasty spill in both equities and bonds. So what are your thoughts?
Yeah, I think it is going to be like most years. It's going to be a potential big mess. If I had one big piece of advice, if you've had a good year, if you've had a good last few weeks, switch it off, go and spend time with your family. Don't blow it all in the last week, last few days of the year, just grabbing those extra pips. It really is an open book. It can do anything. All I look for at this time of year is if there are moves that are well out of kilter with the fundamentals, well out of kilter with the well-known ranges. If we get dollar yen suddenly shooting to 145 or something on not a lot, you've got to look at that and think, yeah, that's an excessive move. And just look at things like that. The rest is all, if it stays in the range, I'm going to leave it alone.
So is there anything out there that's got your attention that you're like, okay, I got to be watching this? Because yeah, I'd agree with you on that. I mean, if we had the dollar yen at this moment in time, or let's say over the next couple of sessions, if we spiked up to 140, I definitely would be fading a move like that. But is there anything that really for you sticks out? Like, I need to keep an eye on this.
Well, Aussie dollar, I'd like to see a stronger close for the week, for the year. If it can get back above 68 before the end of the year, that will look pretty bullish going into 2023. If we can't, then it's got all the hard work to do again next year. It's still holding this move, holding the 66, 60, 80 zone. That's pretty important now. If we break there, we're probably going to be low 66s and maybe testing that 60, what was it, 65, 80, 90 area or something.
Yeah, right around here. Yeah.
Yeah. So if we break through there, then yeah, we could see a steeper pullback. But if we stay above 66, 60, 80, then it keeps that move alive, that bullish trend. And yeah, we should get another push back up towards the 68s, and maybe we can finally crack it properly.
Okay. All right. Steve, what are your thoughts going into year end here? And we'll like, do you fall for the Santa Claus rally, or are you selling into strength if you see it?
I maintain what I've said multiple times, which is, in my opinion, the risks are very, very, very bad to be long. So for multiple reasons, fundamental reasons, macro reasons, you name it. So I'll keep insisting in liking and loving the short
Your downside
side.
target, Steve, what are you looking for? What's your main objective on the downside?
Theoretically speaking, we have no reason not to expect a lower low, right?
Okay. Yeah.
We're still within
numbers.
We're still within the my target for quite some time has been the 3400 area.
Oh, that's where the line comes in.
So I think we can make it there, right? Now, of course, a lot can change, and I've said multiple times that I don't advocate for blindly setting, a target and just hoping that eventually price is going to get there, right? So that's not what I'm advocating, but I do believe that until proven otherwise, we should keep looking lower.
All right. Yeah, and 3,400, just so everybody knows, that's a previous high from pre That's before the COVID lockdown, and then we slumped and then rallied back and took off from there.
And
Kman,
just
what are your
also
thoughts?
also one thing, that's what I've been saying way before Steve, so he's copying me again, but anyway,
Yes,
it's
yes.
okay, it's okay, mate.
That's fine.
Absolutely.
He's
I'm going to be paying him
he's,
royalties.
I just can't wait till he gets to copy you and shave his head. So Kman, what are your thoughts here going into year end?
Well, first of all, the Santa rally may be real, but I've read some research saying that there's actually equities to sell into year end and bonds to buy. So we might have a little bit of a strange year end. I'm just keeping that in mind. One of my currencies that I've been saying and on the flow show and in the room as well, I'm a little bit bearish Norwegian kroner as well into year end.
Really?
Oils are well, yeah. Norges Bank is still selling Norwegian kroner every day. Oils are holding just. If we don't get any more positive news out of China, perhaps they may come off a little bit into year end as well. So I'm keeping an eye on that one. Yeah, for the rest, it's just I think the divergence between Bank of England and ECB is big enough to keep some euro sterling. As for the dollar itself, it's a bit of a question mark. I think it may actually trade close the year a bit higher if the equity market do not massively rally. But yeah, I'm going to be very small if it's in dollars and perhaps a little larger if it's in non-dollar pairs.
All right, and I'm going to point out the technicals that we discussed here with the US dollar Norwegian krona last week with the ForexAnalytix all the clients that we do. And by the way, just so you all know, when we're done here, we go and together as a group, we go through all these major instruments, and then Steve and Stelios go into answering questions for everybody else. We go through all the majors and look at these big ranges and the key developments. And these are the biases. Even though you have a bias, I trade against biases all the time. I just know that whenever I'm going counter trend, I'm just taking smaller positions. But with this double bottom setting up and this wedge and what's that?
Massive.
Yeah, it is. It is very much. And if crude stays weak, we can get a move through this wedge, and that takes us right back to 1006, 1008. And then if we break that, then you have a double bottom, which is completion would take us out to 1040. So I think this is a beautiful setup. And if we get above 10, the figure, I think that's, and that's a good risk off proxy too. So I think it's a really nice setup, Kman. Very nice.
Yeah, I've been in and out of it, as you know. Still got a bit of euro Noki in it, but I'm very much willing to buy any dip in dollar Noki towards like the high 970s or so right now.
Yeah, it looks
really... your 978.65 there. I have that too, and there's I think the daily, the 200 or so is not too far from there, is it?
The daily 200-day moving average is something we've been respecting really over the last couple of weeks.
Yeah, it's not too far either, right?
Yeah, it's down at 977, and it's
nice
very
area.
supportive of price at the moment.
Nice area, and you know where you're wrong.
Yeah, exactly. And that's, as any trader, that's pretty much all we can ask for, right? Is just knowing exactly where we're wrong and where we need to get out. So
your risk, and from there on, the market will tell you if you're right or wrong. Yeah.
Right. And we all know as traders, we're not always right. And this is a good, this is a good time for us to talk about this, because when you look at, this is not the entire team. This is most of us, like, you can see Leandro, Andre, myself, Grega, Steve, Stelios jump in here every once in a while. And Ryan and Kman haven't really jumped in here over the last year they've been with us, but at some point, I'm sure the door will open for them where they post, some of their ideas. What you'll notice is over the last 6 years, six years we've been doing this, the winning patterns in play are 52% as a team. Losing patterns in play, 47.63%. Number of pips and all the percent doesn't really, it matters, but it's not something I really want you to focus on. I want you to focus on your average risk reward that you can see where we put in our stops versus what we're taking profits, 3.39%. So that's just goes to show you that
3.39 times, not percent.
I'm sorry,
3.39 to 1.
Yes.
Yeah.
Yeah. So it's 3 to 1 risk reward ratio. What we control as traders is exactly what Kman says, is that we control our risk. And as a trader, that's what we can control. And it also shows you that we're, most people and most traders, and I can talk in forever about, some of the best traders that I've ever had the opportunity to trade with have always been, 50%, 55%, it's all about managing risk. And that's what it comes down to when you're trading the markets. And if you think you're, always going to be right, that's a fallacy. And I think you have to, come to grips with that as a trader. So those are things that we talk about all the time in a community and as like ForexAnalytix. So anyway, guys, I want to say thank you. I know it's going to be a shortened week this week with the holidays coming up this weekend. We're gonna be discussing our schedules as a whole. We'll probably be here on the F.A.C.E show for majority of this week because we do have PCE at the very end of the week. But Dale may not be here.
Are we closed on Monday?
Well, yeah, it's the day after Christmas. We'll definitely not be here on the day after
so
Christmas,
that's the way it is. Markets are closed on Monday for Christmas and then New Year's on Monday.
Yeah, and so we'll discuss like our schedule. The one thing I do want to say though, whenever we take some holiday leave, is that we're only a mouse click away. So if something crazy happens, and crazy things have happened in years past, if crazy things happen, just watch us on Twitter, follow us around on Twitter, because we'll say we're doing an impromptu show if there's some big event that needs our attention. Let's just hope that's not. Let's hope we have a nice sleepy holiday season. But we will be here tomorrow for sure here on F.A.C.E. I know the Flow show is going to have limited hours in Europe over the next couple of weeks. Ryan, did you want to talk a little bit about that?
Yeah, we're going to be on live tomorrow covering the Bank of Japan in case there's any fallout from that. We're also going to be talking just about 2023, what we're looking at setting up going into it, the events to look out for, where the fundamentals are going into the new year. So hopefully we'll give everyone a good grip of what to expect. But yeah, tomorrow will be our last show, and then that'll be it till January.
Yeah. All right. Sounds good. And Paul says, you mean there's no F.A.C.E. on Christmas Day? Yes. Next Sunday, we will not have F.A.C.E. For sure. And so we're going to
look at the reruns.
we'll talk as a group to find out what days we'll be here on F.A.C.E. And we won't be holding Dale's feet to the fire over the next couple of weeks, but I'm sure you'll have myself and Stelios and Steve and and a few of others of us lingering around for the next couple of weeks. So I just want to say thanks to everybody for being here. We will be here tomorrow morning for sure. Dale, you want to any last minute things you want to say?
Yeah, reflect on your trading for the year, then let it go and get ready for 2023. Make any changes that you need to make over the next couple of weeks and be ready to go. That's what I would say. And I really do think if it's not our community, find one. I don't think F.A.C.E. is enough, especially for people that have been trading for less than 4 or 5 years. So that's, my message going into the holidays is find a good community to be part of.
All right. Well, thanks, Dale. And we appreciate you being here all the time. And I'm glad to hear that you're getting better. My mom
thanks,
actually
Mike.
has COVID right now, and she's been in bed for the last 2 days. So
Yeah.
It's definitely going around. The whole
I have
flu.
RVSP. Oh, I mean RSV.
The RSV, is that what they call it?
Yeah.
You have the
Yeah.
RSVPT.
Yeah, I have to answer. You know.
RESPSCT.
Yeah.
Yeah, I'll go under the best, Dale.
RESP. All right, guys. Yeah, have a great Christmas, Ryan and Kman.
Yeah, you too, mate.
Coach.
Yeah, that's the best thing that happened to F.A.C.E this year is you guys becoming part of it.
Thank you very much, mate.
Thank you
Yeah, it's
very
been
much.
nice.
So that's a wrap, everyone. Don't just count your pips, count your blessings. You know, like Blake said and Ryan said, you had a good couple of weeks. Turn it off. Recharge your mind and your body and enjoy the fruits of your labor. And we'll see everyone tomorrow. Adios.